Welcome to the Polaris Trading Group's PTG University Indicator Review. Today's indicator we're going to take a look at is the Acceleration Moving Average, AMA. This moving average quantifies and displays price acceleration. It is a supercharged moving average. It measures and quantifies velocity vectors of multiple moving averages and multiple linear regressions of price. In physics, acceleration is the rate at which the velocity of an object, in this case price, changes with time. The AMA captures the essence of this price acceleration and overlays price. This is a leading indicator of price magnitude and direction. Let's go to the charts and take a look at what the AMA is all about. Okay, on this chart we're taking a look at a 750 tick of the S&P E-minis, and what you'll see is this blue and red line, which is the acceleration moving average, i.e. AMA, and you can see how the AMA cuts through price. As price is moving lower, it's actually accelerating down, leading price. This is a leading indicator. All right, this is telling us, you can see how this average line is moving down faster than price. It's leading price down. It's hugging the outer edge of price, right, suggesting that there's more downside to come. Price pauses a little bit, right? It cups underneath a little bit. You see how it overshot it, comes back in. Now, if this was a reversal, we would see the AMA, the blue line, continue to rise. Okay, which then would signify that the market price had reached a bottom and it is ready to accelerate back to the upside. But it didn't do that. It flattened out. All right, price, it wasn't ready to reverse. All right, prices cut back down through that blue line, and then the acceleration continued. Okay, as you can see here, again, a small little bounce up, but the acceleration moving average did not signify that there was an opportunity for a move back to the upside. Downside momentum still remained strong, and it hooked back down and again gave a leading coincident indicator that price magnitude was still forcing price to a lower level. Let's take another look at a different example. Okay, in this example, price bottomed out. We got and more than likely that was at a key level. Price bounced up. The AMA shifted from down acceleration to up acceleration at this point, pointing upwards for at least a corrective move in price, which that's what it got. And then you can see here, price kind of pulled back a little bit, and then price acts, the AMA rather, acts as a umbrella, a boundary. Right? Price could not get back up above it, so there was still some downside momentum, right, that needed to get flushed out of the market before price had an opportunity to go lower. Price moved down lower. It actually created a higher low. So structurally, price, the sellers ran out of steam, ran out of gas. We got a reversal signal right in here, all right, off of a higher low signal, and the AMA hooked right up at this candle, so we're about 1 or 2 candles off the low, and it indicated that price wanted to go higher. And as long as price stayed above that rising, that was a very steep rising AMA, and that kept telling the trader that this is okay to continue to stay long, even on this little pullback here. Okay, this little minor pullback, the AMA kept rising very steeply, right, suggesting that there was still more acceleration in the context of price. All right, and so giving the trader a confidence to continue even adding to a position for that matter. All right, so long as that blue line, that AMA, keeps leading. As you can see here, as price was right at this location, right, some of these prior high bars, it gave no signals whatsoever that it was ready to sell off. So again, traders continue to have confidence that AMA is pointing, is on the upside of these price bars, telling them, pointing higher, saying it's okay to buy, continue to buy, or continue to hold your position. And as you can see here, it accelerated a bit further. Okay, and then finally it accelerated to the point where it started to peak out, and then price started going into a sideways consolidation mode. The acceleration factor of the AMA, all right, bled off, and as it was coming down here, it was telling the trader, the astute trader, to take profits, perhaps even initiate a short position here. But for anybody that had taken longs earlier, this was definitely a signal. Combined with other parts of our methodology, told the trader to, at minimum, take profits. The acceleration of price at this point was over. It was in need of a rest, needed to regroup. And so the AMA acts as a leading indicator of price. As you can see here, this downward sloping AMA, again, suggested either profits or initial shorts. So had somebody taken an initial short position here against that AMA signal, right, had a nice pullback of approximately 2.5, almost 3 handles. So it can be used as an entry indicator, supportive entry indicator tool. It can be used as an exit tool as well, right? And it is a leading indicator of price action. All right. Hope this helps, and we'll see everybody at the next indicator update. Good trading, everybody.